Good morning, it's Wayne Belial with another smart profit maximizing moment. Tax season has started, no doubt about it. It's February 9th, 10th. Wow, I lost today. Anyways, February 10th, so we're heading right into the meat of it, okay? Everybody's thinking about doing their tax return, especially if they're getting a refund. Businesses are getting their year-end stuff together. It's time. One of the questions I got last week is, why do I have to pay social taxes on my Social Security and how do I reduce that? Well, why? Because it's the law. Is it fair? That's got nothing to do with taxes. All right, I understand you got taxed on it, it came out, you think it's yours. Government thinks they get a piece of it. End of discussion. Passed back in the Bill Clinton administration, 1996, I think, somewhere in there, where 80% of it is taxable. It's kind of a complicated formula. Based on all your other income and things. So we're not going to waste time on that here. Just understand it's going to be partially taxable. So you might want to take some withholding out of it if your income is over certain thresholds, okay? Talk to your tax preparer. Look, if you were taxed on part of your benefits in 2018, it's a good chance you're going to be taxed on your 2019 tax return. So here's some things to do. The main thing, reduce your other income. Get below those thresholds, okay, if at all possible. Sell, if you have some stock market winners, sell some stock market losers. Use your taxable investments to pay your living expenses first. In other words, don't hit your retirement plans until you have to. All right? Don't take 401k out. Don't take your IRA out. Unless you're over 70 and a half, or that changed recently. I forget exactly what it is. Check. Call me if you're in that threshold, because I should know that, and for whatever reason I've forgotten. Too many law changes. Defer taxable income to next year. You can try to make it taxable one year, not taxable the next year. For example, don't buy mutual funds that have dividends getting ready to pay right before year end. If you're selling a property, delay it. Okay. Consider using a 1031 exchange to defer taxes if you're selling real estate. If you're going to sell a rental property or something like that, think about a trade unless you have a reason. Don't let taxes decide what you're going to do for your financial purposes. It's gravy. It's not the main deal, okay? Gravy tastes good on a lot of stuff, so does the tax savings. If you're considered buying business assets soon, do so before the end of the year to lower your income. We got Section 179, you got 100% write-off of equipment. Man, you can lower your income, especially with the 100% write-off, you can create a loss and make your Social Security not taxable. Look, at the end of the day, get with your tax preparer if you're in a position, especially if you have a business or rental property or something like that. If all you have is retirement income and Social Security, is not a hell of a lot you can do, but there's a few things. Hey, until next time, this is Wayne Belial saying, let's make this our most profitable year ever, and let's pay as little taxes as possible. Thank you.